and thanks for joining us at EMII.com. I'm Caitlin Sisney with your Asset Management Report. Today is Wednesday, April 16th, 2008. The Bank of New York Mellon has been selected to provide a range of exchange-traded fund services and custody services for the first 3 revenue share ETFs, reports International Securities Finance. The 3 index ETFs are weighted by the revenues of the companies in the Standard & Poor's core domestic indices instead of by market capitalization, which has been the most common way to structure index funds. The 3 funds are RevenueShares Large Cap Fund, the RevenueShares Mid Cap Fund, and the RevenueShares Small Cap Fund. The ETF services will be provided through BNY Mellon Asset Servicing, and the sub-advisory services will be provided through BNY Mellon Asset Management. Staying with asset management news, JPMorgan Asset Management, with its $1.2 billion in assets under management, prefers Europe's government debt over Treasuries, reports Bloomberg News. JPMorgan Asset Management Fund Manager CIO John Donahue said the ECB will lower borrowing costs by 0.5 percentage point this year to aid growth. By contrast, the Federal Reserve, which has trimmed rates 3 percentage points in September as the subprime mortgage market collapsed, will cut rates once more this month by 25 basis points and then remain on hold, he said. And in other asset management news, Credit Agricole Asset Management has launched a new Luxembourg-domiciled Indian equity fund within its international open-ended flagship funds, reports Global Money Management. CAAM Funds India Infrastructure is a UCITS 3 compliant subfund managed by CAAM in Hong Kong. It aims to realize long-term returns by investing at least 2/3 of the assets in India's major infrastructure-related companies. During the next 5 years, some predict $500 billion will be spent on infrastructure in India, which will result in growth opportunities for India's top infrastructure companies. And in more asset management news in Asia, the next 3 years will prepare Chinese sovereign wealth funds to outsource their foreign investments, with the speed of outsourcing likely to hasten by decade's end, reports Asian Investor. China's 3 sovereign wealth funds are likely to outsource a combined $320 billion to foreign asset managers over the course of the next 3 years, according to the report by ZBen Advisors. By the end of 2010, the 3 funds will manage an asset pool of $720 billion, and over the next 3 years, they will test the water with global asset managers. After that, the pace of outsourcing will pick up even further. And that rounds out today's Asset Management Report. Thanks for joining us on EMII.com. For more details on these stories and much more, click on our Asset Management channel online and read the latest developments.